Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Friday, May the 10th. Markets did get a little bit of a pullback. Dow down 22, S&P down 6, NASDAQ down 17, dollar up 73. We'll talk about that, as well as gold down 17, getting real close to that break of the 200-week moving average on the weekly chart of 1444. We'll speak about that in a moment. Reason why markets did pull back a little bit, we were up most of the session. Around 2:30, we had a trading desk room at the Wall Street Journal was going to post an article about Ben Bernanke, one of the voting members of the Fed, recommending to pull in the reins of their asset purchase program. Now, that spooked the market, and rightfully so. If I was long, I would be extremely spooked and looking to take some profits because of that. Why? Because we are up here because of the Fed, and worldwide central banks are intervening with their currencies and buying their own bonds and buying the market itself in general, creating this wealth effect and pumping dollars into their own system. So that's why you have, we all talk about the currency wars. And I won't get into that, but I do want to state that Ben Bernanke is speaking this morning at the Chicago Fed Banking Conference, 9:30 a.m. Very, very important. If you are trading or if you are obviously long this market, you definitely want to tune in to see what he has to say. Because if there is any hint at all of reducing the asset purchase program of QE, the markets will react to the downside. There's no question about it. Okay, we do have Treasury budget coming in for April. Going to be released around 2 o'clock, and that's really it. But the big factor is going to be Ben Bernanke speaking at 9:30, guys. Make sure you are aware of that. Okay, I found this chart on the internet, and it's actually really interesting. And I wanted just to show this to you. This is margin debt, meaning all of the buyers who are on margin, which is pretty scary if you look at the market at all-time highs. That tells me that everybody, every retail guy that is trading, that is in the market, is on margin. Now, that doesn't mean that the market's going to sell off today, tomorrow, or any kind of crash. But you have to say that if this market does pull back, and it does pull back violently, then you will have a lot of this margin going to be called in. Markets are going to sell off even harder. Just a sight, this is not to be traded on, but just is really scary if you see this. Margin debt, 300 and almost 400 billion. That's pretty scary. So anyway, all right. I thought that would be interesting to show you guys. Okay, so let's look and see what's happening here. And I'm not gonna talk about indicators today. We all know the indicators are extremely overbought. And I want to show you. I want to tune down more into the charts today. But I will show you the VIX, and letting you know that the VIX is being bid up. Okay, so the option market is pricing in some fear, ever so slightly, but is pricing in some fear. CBOE put call is closed neutral at 1, but you can see that that it is starting to spike up from being bullish here to now neutral. So fear is creeping in the market. So we want to keep an eye on that. Okay, let's take a look at gold now. I want to talk about gold. Gold here, as you know, we had that extreme crash, and now we have this big bear flag, and we've kind of just consolidated here on a daily chart. You can see now we are overbought in our stochastics, and we're not overbought yet in our RSI 14 on a daily chart, but this is what I'm looking at right here. And I am going to watch this ever so important, if you will. Going to be increasingly interested in looking to sell gold a break below the 1444, which is the 200 bar moving average on a weekly chart here, and it has to close. We need this to close. So if it closes and it back tests and fails again, it's not just a close and then you short gold. It's not the case. But watch this, because as of right now, while I'm recording this, gold is trading at 1447, so it's right there. We could get a big flush today, guys. And if gold starts to sell off, what's going to happen? The U.S. dollar is rising, and that's exactly what's happening. So remember, worldwide central banks are pushing their currency lower, flooding the market with dollars, with their dollars. And where is everybody going? They're going to put their money where? The only safe haven currency is going to be the dollar. What's that going to do to precious metals and commodities? It's going to put pressure on the commodity sector and equities as well, and that will push that down while the risk-off effect takes place. Right now, remember, this will change, right? As of right now, we do have an inverse correlated relationship between equities and the dollar. Eventually, when you have a very good economy humming along, the dollar will rally with obviously equities. But right now, it is still inversely correlated, and that's what I would see. That's what I would look for in the coming days and weeks, that the dollar continues to rally and gold and precious metals and commodities start to sell off, and that will probably put pressure on equities as well. Okay, so let's get into the charts here. We did have our resistance zone of 1625, 1635. We literally touched it, I think, literally by a penny or so. We are still in this resistance zone. Now, we could still pull back to the 8 and still be bullish inside this uptrend channel here. Let me just get that back in here. There we go. So remember, guys, we could still be bullish, but we still need a little bit of a pullback. I mean, a healthy pullback is definitely in the cards here. But we could still literally pull back 2 or 3 days and then rally one more time before we get any meaningful correction. So just keep that in mind. Here's the Spiders Daily. Just wanted to show that to you. As you can see, we're at the trailing the upper end of the Bollinger Band. Okay, we are extremely overbought at 98.73. That's pretty crazy how extended we are, and the markets really don't care. Again, that's why I say overbought is not a sell signal. Okay, but we did get a distribution day at the end of the day. As you can see that in red. So that's something interesting to see what's going to happen today. Today's going to be very important, especially with Ben Bernanke speaking. If there's any type of hint. Now, remember, if the markets are getting out of hand, it's only normal protocol for the Federal Reserve to kind of talk down the market, and he would do that. There's no reason he doesn't need to reduce his asset purchase program. He's probably going to talk the market down, maybe say some key negative words today, if that is in the cards, and the markets would sell off, for 2 or 3 days. I mean, that's the beauty of the Fed, right? You got the power of just speaking some words properly, meaningful words with what he has to say today. And then the markets would just react on that. And that's really all he would need to do, is talk down the market just a bit to cool it down a little bit. Because I know that they must be nervous on what's going on with this market. Just ripping to new highs continually every day. I mean, we've been up literally, guys, 13 out of 15 days. That's really kind of spooky, if you ask me, without any meaningful pullback. All right, here's a 30-minute chart. And as you can see here, and this is what's been happening. Gap up and slow grind higher. Then we have the gap down. Well, we didn't gap down, excuse me. This was on the Ben Bernanke news. But this is something that you need to look at for day traders. And you can see we just grind, look, gap up, and just grind. So no volatility. And that's really upsetting to, you sit in front of screens all day looking for opportunity. And this is what happens here. Slow grind, and the ETFs and the indexes move, and a lot of the stocks are either make their move early on and then just kind of stay in the channel pretty much most of the day. Okay, so we have the 30-minute. Here's the 50-minute. Just wanted to show you a 50-minute chart here as we have that slow grind up, and now we're breaking back down again. It'll be interesting to see if we come back up to this area of 163.20, 163.21. I'd like to see this start to fail. This is a 50 EMA. 50 EMA on the 15-minute chart, and of course you have the 200. So the first breakdown candidate would be, I'd like to see it take out yesterday's low of 162.45, and then you probably will get a flush down to S2 or in that 200 EMA on the 15-minute chart here. So this is something interesting to look at for this morning. This is definitely going to be an interesting morning, guys, that's for sure. Fridays are usually a non-event. You have a good hour and a half of trading, and then that's pretty much it. But today will definitely be interesting to see what happens. Here's the IWMs. Weaker than the other indexes. This is our leader, but still not leading. Again, could play catch-up, but as you can see here, 99% on the stochastics. So not saying that we're going to get an extreme rollover, but if you are long, please tighten your stops, because this is getting a little bit stretched here. So I would definitely be looking to tighten my stops on IWM if I was long that index. Transports really took it on the chin yesterday. This is our leader, but we'll see. Again, 98 on our stochastics. We're really overbought in our MACDs, and we are up at the upper end of the range. Now we're coming back down today. So we had an outside day reversal from the previous day. Let's see if this has momentum and at least test this long-term uptrend line in red here. Okay. Here's the diamonds. Really had put in a doji on the diamonds. And again, I like to see this come back into at least the 8-day moving average and then kind of reevaluate it. Here's the gap area of support, as you can see here in the diamonds. So again, market's still well bid up, and we had a little bit of a pullback yesterday. Really wasn't meaningless. We'll see what happens if we get a decent pullback today, which would kind of put some sort of mood sentiment, if you will, for next week's options expiration. All right, and here's Goldman Sachs. Goldman's, I said yesterday that, watch, we have a little bit of heavy resistance up here. Goldman could not take this area out. So maybe Goldman sets up and pulls back a little bit to either the 145 area or maybe the 146.5, 147 area, and then resume its uptrend, because it did take out this bearish trend, as you can see, lower highs here in red, and this bearish downtrend line. So now we have bullish confirmation here. So now maybe just a pullback. We'll see how deep the pullback will be. If it is deeper pullback, then this just could be a one hit wonder and start to roll and resume its downtrend. But we'll have to see what happens in the next couple of days with Goldman Sachs. Here's the XLF. Really bullish here in this uptrend channel, and again this uptrend trend line of the upper end of this channel now is sitting on it. So a little bit of a pullback here is normal. Let's see if it can fill this little gap area here in XLF, which again would fuel the downside, would help equities anyway. Okay, here's Apple. Apple, guys, sold off a little bit yesterday. Nothing really serious. If you are bullish and you're still holding it, obviously I would look to really be putting your stops below 452 here in Apple. And then lastly is the Qs. Qs here had a Dragonfly Doji, so let's see if the Qs actually can reverse and at least fill this gap here, which would coincide nicely with the 8-day moving average. Okay, guys, a lot to see this morning. Pretty much the risk event's going to be Ben Bernanke speaking at 9:30. Really make sure you guys are aware if you are long, and or if you're short for that matter. Be aware and really pay attention to what he has to say, because the markets will move on his comments. Have a great day, everybody, and really enjoy the weekend. Beautiful day today in the East Coast. Going to be about 80 degrees. Have a great day, and we'll speak to you on Monday. Bye-bye.